Hi, I'm Alice, and this week we have another InvestaCrowd colleague with us. I'll let him introduce himself.
Hi, my name is Bill O'Donnell. I'm the Business Development Director with InvestaCrowd.
Our mission at InvestaCrowd is to provide real estate investment opportunities.
This is our weekly roundup of all things crowdfunding. We talk about news, deals, and anything else of interest. What's latest in the news today, Alice?
Well, I thought this week we could just talk about another form of crowdfunding being used for the election in the US. It's over, but apparently there's now a crowdfunding campaign sponsored by Jill Stein of the Green Party and raising money apparently to recount votes in Wisconsin, Pennsylvania, and Michigan. And she has surpassed her original funding goal and has raised more than $6 million.
Wow.
Yeah.
Wow.
So this highlights just the fact that crowdfunding can be used for traditional forms of fundraising, but moving it onto the online platform.
So she generally raised this amount through smaller donations.
Smaller donations, pledges on her own private campaign page.
Wow. Interesting.
And you were going to share with us a question that you get asked a lot,
Yes.
Which is guaranteed returns.
Yes, it's quite frequent in certain markets, particularly in holiday markets, where a developer will offer a guaranteed return to clients interested in purchasing an apartment or a condotel or even a shared office space. I think it's something that you need to look at very carefully to understand exactly how are they generating that guarantee of a return. Often it will be couched into your purchase price. So in a sense, you're just paying yourself back, but over time. Other things to be careful of is understanding the security of that guaranteed return. Is it in a separate entity as an escrow account, or is it funds that the developer expects to raise through the operation of the vehicle? Obviously, the second one is a little bit more risky.
Right.
I think, however, the overall point is the developer is not offering you a true exit from your investment. They're giving you a return, and they're saying over a certain period of time, we will guarantee you will make this amount of money. But they're not offering you a way to sell your asset. And that's, to me, where you finalize the investment and where your full return is initiating. You could take an example of a 10-year per annum return, which would be quite aggressive. In that scenario, you're well into year 11 and 12 before you're making any money. This is if you fail to liquidate the asset. So in these markets, my personal opinion, and where I look to invest in today's market, is where the developer can give me a fixed return and a fixed exit, so that I know at what point I will be fully out of the investment. Generally, we find this in the debt space. So this is mezzanine debt or senior lending debt. The developer is offering me a fixed return and a fixed exit. So I know generally in 12 or 24 months, not only have I recouped my interest, but I've recouped my capital or principal investment, and I'm fully out of the cycle of that investment.
So the key takeaway, define exit.
Absolutely.
That wraps it up for us this week. If you're interested in real estate crowdfunding, please sign up at InvestaCrowd.com.
Thank you.
Thanks.